What is going on, everybody? And in this video, we're providing a state of the market and stock picks for December 15th, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was the big pivotal day, the unveiling, of 2023, and what we are looking forward to. Now, at 2 p.m., essentially the market has been pretty quiet all day. There was a little bit of a push this morning, and then only to roll into the 2 o'clock where we got a 50-point basis move, which was expected. But what the current concerning part is that the Fed essentially are seeing unemployment rising in essentially 2023 to 4.6, remaining at 4.6 for 2024, and slightly decreasing in 2025. Not only that, but essentially the Fed do not see a pivot at all next year, that rates will not come down till 2024. So yes, we may get two more 25-point basis moves in the first couple meetings in the beginning of the new year, and then we will hold there for the remainder of the year till 2024. Something I have talked about to this point. The Fed have been pretty transparent about this whole thing for the past couple months. The problem is you get misleading data, and essentially a lot of the media was the same way until just recently. And you had the CEOs essentially telling you that things are going to get really bad in 2023. So that means your unemployment numbers are going to go up next year, which essentially is going to it's really going to hurt the market. And something I've been talking about, how I shifted focus out of inflation into the consumer. This is looking worse and worse for the consumer going into 2023. Again, savings rates depleted. I don't want to beat that with a dead horse. The rental units are still going to be sky high all next year because of the fact that a lot of people just can't qualify for homes. Homes are just going to be way too high just to get qualified, and realize that you're probably spending an extra $100,000 to $200,000 on a home just because of the rates and currently where they're at. Yes, primarily where you live, but most people are forced to have to move to the city because of the fact that I know a lot of farmers are having to shut down farms as well and move to the city. And cities are expanding a lot. I myself, in the city I live in, over the past 3 years, has expanded at a ridiculous rates. And essentially every piece of land that I have seen has been dug up, is being developed. And so with that being said, again, it's going to be harder and harder to qualify. So you're going to get, again, a to afford. If you need that liquidation more years, 3 more years, we're going to have some really big issues moving forward. And understand that this was my concern. I thought we would align with the 50-point basis move, but I was hoping to an extent that something better or would essentially come from FOMC or from essentially Powell today. And I mean, yeah, some good stuff. We're seeing decline in inflation, but again, it's not 4%. Again, the Fed are going to continue to hammer this thing down just to make sure that inflation doesn't come back. And then this is in hopes that it doesn't, because if it doesn't, you're going to reset the clock and kick that can even further down the road, which is going to cause this thing to implode even further. So now, where does the market go from here? The market is essentially in no man's land. There's no positive sentiment to push up. You're going to get earnings. The next thing we focus on is earnings. What are earnings going to look like? Is this where all the companies start to show some major weakness? Your big hitters like your Teslas, your Apples, your Googles, your Amazons, are they going to be really exposed? Essentially, I've been talking about this at Black Christmas that things were going to look good. But there was a lot of hopium in the air that things would get better, that we would pivot. And again, the Fed have been talking about this for like 2 months, that once the rates get to a certain point, they're going to hold it for an extended period of time before an actual pivot happens. And now they're projecting that pivot to not even hit to 2024. So again, you got a whole year of things looking a lot worse. And it's not, again, looking good for the consumer. And why I've been saying at this point, you should be essentially gathering as much powder and as much cash as you can get. So things will come down at a dramatic rate around roughly, I think around springtime, summertime. You're going to get some sort of crash because people are trying to liquidate, and you're already seeing that people are selling memorables and stuff that they were paying for at ridiculous rates over the pandemic. Now they are chopping that in half, or even 75% of what they bought it for, just to get liquidity. And so you got to understand where everybody's at right now. And yes, I think a lot of consumers accumulated a lot of different assets over the pandemic because of the fear that was there. And then now they're having to liquidate them because of what happens in these nasty cycles. This is what happens when you print 40% of the money supply in 2 years, and then realize that the back half is this is what inflation is doing. It chews up all that money, and the tightening process does do this. Again, it's a very ragged tool. It's not a great tool, but this is what is the only tool that the Fed have, and they're going to continue to hammer it to make sure that the inflation doesn't run away. And now you're going to start seeing deflation in the demand destruction, even more so over the next couple of months. And so again, it's not saying the market can't push up, right? The market can separate itself from the economy, and it's proven that it could pull away and do that. But right now, you have 2 more weeks, which you have the holidays, so you're not really going to get a lot of movement typically now. And then we would typically have the Christmas rally. Now, being said, do we get any kind of rally? We hit expectations on the 50-point basis move. Problem is it's a really bleak outlook. Again, the stock market is like a goldfish. It loses its memory after about 5 seconds, and then it's off to the races. Well, maybe, just maybe, if earnings are good, then we can flip this thing back over, and the Fed will get some sort of hopium at some point. It's not just going to say, I do believe 2023 isn't going to be a great year at all. But again, hopium is very potent when things are just so bleak that the market could still separate itself and start pushing. But it has to get to a point. I think we haven't quite reached that breaking point when the consumer folds and you get some kind of real big crisis that causes the market to potentially crash. And then at that point, I think we could start moving up. But again, the question is when does that happen? Again, we don't know. We don't know how much assets the consumer has accumulated over the past 2 years, and how much they're liquidating for that for. And again, it's just essentially a ticking time bomb at this point, and waiting to see what happens. But with that being said, that's pretty much where we're at. That's what we're looking at for 2023. Again, things are looking bleak. And then now we have, I believe, FedEx on the 20th. And then we have, give us some more insight into what we could potentially be seeing for the Christmas rally earnings. Not to say that the market, again, can't run. It might get some sort of run naturally. It has a rally going into the earnings, and then obviously if the earnings report and they're bad, then it will correct from that point. And that's what I'm thinking we're going to see coming into this next earnings. I think Apple and Amazon are going to be really exposed. Tesla's energy companies, so it'd be interesting to see how they do play out. Again, there's a lot of bad whispers in the wind about essentially Twitter and all kinds of debt and everything else. So who knows what's true, but we'll definitely see what happens with Tesla earnings at that point. I think I still believe that Elon is liquidating at this point in hopes for his successor to take over, I think potentially in this next earnings release. And so we'll see what happens there, but we'll see. Now, again, next thing we're aiming for is earnings at this point. Again, we're still about a month out from that, but we'll get some pretty quiet time here, some lower volume here for the next couple of days. We're going to get the aftermath tomorrow. Maybe we gap down, maybe we gap up. It really just depends on how the market wants to interpret that again, but things just start looking bleak, and I think you're going to have earnings that are going to back that as well. So tomorrow, again, we don't want this thing to break below the 39.21. If it does break below that, again, we're going to start heading back down lower. I don't see us making a new low. Again, anything is possible. Maybe the market is just bleak and everybody's just trying to liquidate assets. Who knows? That's another alternative. People may just start selling stocks so they can pay for stuff. So that's something else that's on the board. If you're liquidating assets, you're going to liquidate all your stocks and stuff before you start liquidating your houses. We do also have a big option expiration. I think there's a couple of trillion coming off the books at the end of the week. So you may get some more selling on top of that. So that might come in either tomorrow or Friday. That's something else that could be more sell pressure for the next couple of days. Again, if you want the bulls to break out, they do have to break that 4,100. It's been a wall, and the news that has happened, I really don't see us breaking 4,100 because it's just not looking great. The dollar itself, again, still holding above the 102. The 102 is a strong support. I think this thing is going to jet here pretty soon. Get a nice bounce, whether we continue back to an all-time high or a new high, or if we make a new low. Definitely have to watch that closely. Again, any new events are going to override whatever happens with the dollar anyway. Tesla, I was looking at Bitcoin real quick. Bitcoin still holding 17, 18. Again, I think this is just going to continue to chop like the market's going to fall. The market starts selling off. I think this is going to start selling off. Maybe Bitcoin could get a pretty strong catalyst because of what's playing on. Maybe people are just going to be tired of what's going on with the regular financial markets, and maybe they decide to start pumping Bitcoin for hopes. Right now, the problem is during times like this, people start gambling in hopes that things will play out. This is also why you see the lotteries exploding to 100K, 100,000 quickly as well. But people are just in that mode that they need something to happen. They need it to happen now. So we will see, but that could be a potential something that's going to fuel Bitcoin. You never know. So we'll have to see how it unfolds. But you also have the FTX drama. And if anything, if some big institution comes out that they were backing and lost billions of dollars with FTX or whatever the case is, that could be a huge catalyst for more selling. So you got to be really careful there. Tesla, again, just continuing to sell off. Again, I think it's Elon's liquidating a lot of his position in hopes of that transition that could be announced by, again, this Q4 earnings. But we'll have to see how that does play out there. Again, not really looking to get back into this. I don't like the fact that it keeps selling. This thing needs to pop. Again, it had its breakout here. Like I said, these breakouts have been absolutely horrible this year. And a kind of descending wedge, it just breaks and then it just dives back off into the pattern. So I see at least Tesla hitting 150 at this point, hitting this bottom channel. But at this point, it really doesn't matter. I think this thing is just going to keep going, even with that bottom channel there or not. So we're going to have to see. Apple, again, really watching, again, 135 for support. Thing is with Tesla selling off so much, people are going to go, again, they're going to shift their money from one asset that may be not doing so well, like Tesla right now, into Apple and maybe even a Google and Amazon because Tesla just can't hold it together right now. So we'll have to see how that goes there. BA again strong. People are buying a lot more value in financials because of rates being high and thinking that essentially the banks will hold us, and that's pretty much what's held us up all year. For any kind of push has been value in financial institutions at this point. So again, very overextended. At some point, this thing is going to cave. It's just waiting to see what that is. Maybe it's the catalyst with the consumer folding and everything goes down. But when you start seeing everything look the same, that's cause of concern as a big move. Typically, a very bad move is going to happen. So when things start looking too much alike, all industries start looking the same. That's a cause for concern. JPM, same thing. It's just holding, consolidating. I don't like, again, overextended, hasn't pulled back yet. Again, still watching that 130 mark for a break. Again, if it does break there, you got a pretty big gap down on 118, and then looking for that next level at 112. So looking for that. GS is already kind of sold off. So still holding support, the 357. Again, break that. You got a pretty big drop down to the 324. Again, this is a daily, so it's going to take multiple days. It's not just going to be an overnight thing, again, unless something, some bigger catalyst plays out. Bank of America hasn't recovered since its essential comments from the CEO. So looking at this thing to come down to the 29 mark. Again, we'll see. I think it's going to be a slow bleed off for Bank of America, but we'll again have to see there. But that is pretty much all I got for this video. Again, I'll have more for the weekly updates. Not expecting much again for the next 2 weeks, although I see a continuation for the next 2 days with options expiration. In the bleakness of 2023, we could get some selling there. And then in preparation, and then potentially rally after the 2 weeks, doing our earnings mode, just the natural rally. And then from that point, I think we might correct and come down pretty hard. Again, if earnings turn out to be really bad, if things get good, essentially earnings is kind of your front line of when things are going to get better. That's why it's really good to watch earnings, see what the CEOs say, and then go from that point. So if you made this far, I do appreciate it. Go ahead and drop a thumbs up. Until next time, I'll see you guys later.